Well, guys, we're back in the fourth quarter of the year. It's October and it's time for some real estate news, because if you remember what happened last year, all I'm going to say is history could be repeating itself. Stay tuned. What's going on, guys? My name is Adam Odurumi. I'm the founder and CEO of Uprise Real Estate Partners, and we are here to deliver to you the October monthly market update for the real estate market in Central Texas area. The first thing I want to say is we got some things to talk about, because what we mentioned that could happen at the end of last year, beginning of this year, it looks like we're seeing signs of it happening, but a little differently. So again, remember, this is the October monthly market update. We're going over data and stats from the month of September to see what's been going on. Give you the stats for October coming out next month, but we can tell you where the trends are heading, okay? So let's just jump right into it, because we got a lot to talk about. In the month of September, we had a total sales of 2,744. In the month of September, listen, 2,744. Watch this. In the month of August, the month prior, we had 3,168. That's a significant drop from one month to another, okay? When we look at the average sales price, we have 385,210. Now, what's very, very interesting is it's actually no change from last year, meaning those who sold their homes last 2022 in September, 2023 in September, no change in the average price of homes. In the month of August, it was 387,844. So just a hair higher. So for the median price of homes in September, we have 318,950, okay? In the month of August, the month prior, it was 322,250. So we see a little bit of a drop there, okay? Now, as we get into days on market, in the month of September, our days on market was 64 days. I mean, this is how long it takes the average home to sell once it goes on the market, 64 days. That's an increase from from the previous month, which is 56 days. So almost, I mean, that's what, 8 days increasing on the days on market. And we saw that as we keep our finger on the pulse of the market. Price per square foot, a little bit of a difference. For September, we're looking at $180 a square foot. For the previous month of August, it was $182 a square foot. Now, here's the big thing, right? Here's the big number that I've been telling you, if you watch our monthly market updates, the number to be watching. The months of inventory, right? The months of inventory. We have 4.3 months of inventory. We have not really been in the fours over the last year and a half, right? The previous month in August, we crept up to it. It's 3.9, but then it went past 4 and it went to 4.3 in the month of September. That is big. Why? Because that's showing a bigger trend of moving more to a balanced market than any other months we've had. You say, hold up, Adam, I thought we were already in the balanced market. No, it's just the market's been so crazy the last couple of years. What you thought was a seller's market felt like a more balanced market, right? It just wasn't an uber crazy seller market. So remember, as you get closer to 6 months of inventory, now you're talking about really it's between 4 to 6, depending on your market, 4 to 6 months of inventory. Now you're moving more to a balanced market. Once you get past 6 months of inventory, in terms of traditional speaking, now you're into a buyer's market. So we're still not fully into a buyer's market. We're just creeping our way to a more balanced market. When we look at the average residential rentals, it went down. It's only $1,812 in terms of the average residential rental for the September. When you look at August, it was 1,886, right? 1,886. That's a big deal, guys. That's a big drop coming off of the summer into the fall. And so what are we seeing? Well, if you remember, I mentioned to you earlier in the year that I believed that the Fed started reducing how much they're raising the Fed rate because they didn't want to be the reason for the economy going into a recession. So they were going to just let things kind of play out. And when they did not raise interest rates more than raise Fed rate more than 0.25% early in the spring, I said we were going to see a real estate housing boom, right? There's a window, and we did that. The last 5-6 months, we saw way more sales than we did the previous month. We saw the average price of homes, the median price of homes go up so much more than it did the more 6 months. And I said, watch this, I said, I believe that in the fall, maybe beginning of fourth quarter, the Fed was then gonna drop the hammer, raise the Fed rate, and just drop the hammer, right? And send the economy into a recession, mortgage rates go up, all that kind of stuff. Well, guess what? They didn't do that last week. They didn't do that. They actually said that they wanted to control inflation more, but they weren't sure if they need to do that by raising the Fed rate. Some people were excited by that, like, oh, they're not going to raise the Fed rate, or maybe they're just going to raise another 0.25%. And I was like, no. They're doing something. Don't get it twisted. It's the government, right? They're doing something, whether you see it or you don't, they're doing something. And magically, within the last couple of weeks, even though the Fed rate was still the same, mortgage rates kept creeping up until this week. By the time you're watching this, maybe the previous week, mortgage rates are in the eights. We talked about that possibility last year, right? While a lot of other people were telling you that this year mortgage rates were going to drop and you could just refinance, we told you that's probably not going to happen. If interest rates drop, we didn't see that happening until 2024, possibly. But we knew it was a very, very high likely chance that rates would go up into the eights, and we'll see what happens from here. And so what's so interesting is that they did not drop the hammer, supposedly, and raise the Fed rate 0.75 or a point or half a point, but we're seeing mortgage rates continue to go up, and it went up into the eights. And so what does that mean? Well, if you are a buyer, okay, what that means is, yes, it is more expensive for you to buy the same home that you could have bought a couple of months ago from a monthly payment standpoint, for a loan standpoint. So what that means, if you're a buyer, if you have a true need, if you have a true desire to buy a home, it means that you need to negotiate better deals on your home. That's really what it means, right? You need to negotiate lower sales price, better terms. And so you need to make sure you're working with the realtor, whether it's here in Texas, other parts of the United States. You need to make sure you work with the realtor and the broker who know how to negotiate, and they're going to help you build a sound strategy and game plan to get you the best deal. That's number one. It's also going to be, if you're a buyer, very important to not do what a lot of realtors and buyers do, where you just go out and start looking at homes. No, it's that much important to sit down and figure out your budget, figure out what your monthly payment going to be at different price points. What can you get in terms of a home in those different price points for several areas that you're looking at, and really figure out the strategy and the game plan that's going to help you reach your goals, but still make you not house poor, right? That's going to be very, very important. If you're a seller, I'm going to just keep it real. You missed out on an opportunity. You missed out on the opportunity on that window that I mentioned. Maybe you weren't watching our monthly market update videos. Maybe it just wasn't the right time to sell, which is perfectly fine. But you missed out on the opportunity to get the most amount of money for your home in 2021, 2022, even that window from spring and summer in 2023. Well, now we're going to see a repeat of what we saw last year, which is the fourth quarter of this year, the first quarter of this year. We're going to see prices come down. We're going to see homes stay on the market longer. We're going to see sellers not sell homes as fast. Why? Because when interest rates go into the eights, you're going to have buyer sticker shock again. You're going to have that, oh my gosh, it's 8%. Their family, their relatives who bought houses last year, the year before, within the last 3-5 years. Oh my gosh, you're buying a house with 8%. That's crazy. And they're going to have a standstill for a while. Same thing that happened fourth quarter of last year. Now, what did we see this year? That when we got into first, second quarter of this year, buyers were like, okay, that's cool, but I need to buy a house because I'm still renting and rents are going up, or my rent's not dropping, or I want to have an opportunity to build equity, or I'm trying to build a family, or I'm moving to a new area and these rental prices are crazy. That's going to happen, but it's going to take a while. And so as a seller, you have to just know what the situation currently is and know that your home's probably not going to sell fast unless you price it very aggressively, that buyers are going to be looking to get deals when they buy your home. So you need to understand that. And if you're looking to overprice your home, or you think your home's the same value that it was last year or beginning of this year, unfortunately, you're going to find out the hard way, right? And you want to make sure you work with a realtor that's a trusted advisor and that's going to tell you the real deal, Holyfield, and not just tell you what you want to hear and just set yourself up for failure. From an investor standpoint, if you're a cash investor, this is the time you've been waiting. Soften their prices more, negotiate better deals. The economy is getting tougher for families and businesses, so you may see some opportunities from a distressed seller standpoint. You want to make sure you're in the game this fourth quarter, and I think you're definitely going to see a lot of opportunities in the first quarter. So as a brokerage, we're going to be making our pivots to service you guys and bring a lot of value to you guys as well. And so that's all I got for you guys right now. I don't want to hold you up too much. I just want to let you know that you're going to start seeing more real estate information on the news. You're going to start hearing the fear again, just like last year around this time. Don't be succumbed by the fear. Make sure you're going after knowledge. Make sure you're going after wisdom. Make sure you're understanding what's happening in your local market. so you can understand, again, where the opportunities are. There's still opportunities for buyers, still opportunities for sellers, but you got to be more smart than ever before. So if there's anything we can help you in terms of game planning, helping you reach your goals, or if you're in a bad situation, helping you figure out how to get out of the bad situation, let us know. We're here to help. I hope you're doing well. Talk to you soon.